All right, Dave. So I want to pick your brain today. Is that okay?
Let's go.
Okay. So really, I want to ask some questions of, let's assume somebody is just starting this whole home buying process and they're just starting their research, the questions that they would want to ask you. So I'm going to just kind of grill you today. Is that okay?
I got the light like shining down on me. Let's go. I love this.
All right, let's do it. Okay. So first of all, we don't all have the money in the bank to buy a house cash.
Yeah.
Most of us need to get a loan.
Indeed.
And I know it seems like a really just no-brainer question, but can you just give me an overview of the different types of mortgages out there?
Yeah, no doubt. There is quite a spectrum for sure. And, I know it sounds very cliche to say, but there really is a product for everyone in most cases. But I'll tell you, I'll tell you what programs make up about 90% of the transactions that are financed in the United States of America. And they fall within 3 buckets of financing. And one of them is what we call conventional financing. Conventional financing, have you ever heard like the terminology Fannie Mae, Freddie Mac being used?
Right. I have, but a lot of new buyers wouldn't necessarily. So.
They may have seen it in like a Senate hearing or something like that on TV.
Who's Fannie Mae?
Who's Fannie Mae? But they're government-sponsored entities. They make up the facilitation of a large amount of the amounts of loans that are done here. And they offer, these are for people that want to buy multiple property types, like either a primary residence, potentially a second home or a vacation home, right? That house in Tahoe or Havasu or whatever. And also rental property, right? You can do that all under this conventional bucket of financing, and it has down payments that start in as little as 3% for first-time home buyers. And then, of course, 20, 30, 40, 50%, depending on how much, cash people are bringing into that. Second to that would be VA financing. So this is a loan program for our nation's heroes, right?
Oh, that is just touches my heart.
The best program, hands down on the planet. There is not even a close second place to the gravity of impact that a VA loan can make for a borrower. This allows a active duty or veteran service member to buy a home with no money down, subsidized interest rates, no mortgage insurance, and ultimately be left with the lowest possible payment at the most flexible underwriting guidelines as well. We should do a whole video specifically on VA financing.
We'll do that
I hope
sometimes.
we do. Yeah,
let's do that.
and then the third is FHA. So FHA is a very cool loan. We've heard about it for a long time. It came out in 1934. Franklin D. Roosevelt created that program. It's administered by the Department of Housing and Urban Development.
I love that you know that fact.
I'm a geek, dude. I love it. But no, you know why I always remember that fact? Because it really tells true to what its intent was and the impact that it continues to make today. It was started in 1934 to help this country crawl out of the Great Depression.
Wow.
After the Great Recession of 2008, where the subprime market really imploded real estate, right? Completely different than any sort of impact that we are foreseeing in the future. There are no subprime loans, right? Those are like forever in a grave, hopefully forever. But in 2008, when lending programs pretty much went to a halt, FHA was the program that pulled us out of that.
Oh, I love
and
that.
Yeah, and it's still here today. So FHA is a loan program. It only requires a 3.5% down payment. But the real important component of FHA loan is that it's government insured. It's basically an insured loan. So when the United States Department of Housing and Urban Development insures me to give this gentleman or this young family a loan, we are able to do it at a lower interest rate than like a comparable conventional loan because of that insurance. Super great program. But between those three, makes up about 90% of every transaction that's financed in the country.
Okay, fantastic. So, and you kind of answered my question a little bit. So I wanted to talk to you about the role of government-backed loans, which I love that you addressed that with FHA and VA. So essentially what I'm hearing is that it's less risk to the financer.
That's right.
And so therefore they're able to offer more as a benefit to the consumer.
Well, interest rate is a reflection of risk, right? That's why people with better credit scores and have better credit profiles get better interest rates. It's all, interest rates are driven by risk. So when you know that with an FHA loan, you have the full insurance of the Department of Housing and Urban Development behind you, it's not a lot of risk to guys like me out there. And on VA loan, the Veterans Administration goes a step further. They don't insure it. They guarantee the lender against losses obtained for it. So it's like the safest loan that a lender can do, which is why at the end of the day, it's the best interest rate you can ever get.
I love that. I love that. Okay, so but what about the people that don't fit in those boxes? You said earlier that there's really there's a loan for pretty much everybody. So are there options for them?
Yeah, for sure. I mean, I talked about that 90% being in those three buckets. Well, the other 10% is still a very big number here in the United States of America. So yes, absolutely. The lending community has come up with wonderful solutions. I'll tell you, the group of people out there that tend to struggle in the more like traditional things that I mentioned are like self-employed people, right? Because it's difficult. Like if you have a really good CPA, they're gonna take potentially a really big revenue number and they're gonna like and come up with a number because they're really driving forces to help minimize your taxable liability, right? Whereas a lender has the opposite initiative. We're here trying to maximize your qualifiable ability. So we're working kind of at odds with like a self-employed person's CPA sometimes. So the industry has developed programs that allow us to go a little bit off the beaten path and use like non-traditional resources to be able to evaluate what Katherine might be able to qualify for. Things like using bank statements, P&L statements. There's just like this whole other world of loans that exists for the people that kind of can't fall into that really vanilla conforming box.
Which I love because we're in America. And one of the things, I mean, one of the reasons why my father, as a British citizen, now he's an American citizen, he came to America because it's the land of opportunity and being able to start your own business. But it's just knowing how to go about the right way.
Make no mistake about it. The self-employed drive the U.S. economy 100%.
Oh my goodness.
So naturally, in fact,
we're those people right now.
Yes, absolutely. But most of these programs that we're talking about, in fact, are only available towards self-employed people for that specific reason.
I love that.
Yeah.
I love that. Okay, let's talk to me about down payment assistance because especially lately where closing costs have become more expensive, we are thankfully in a market where it is very, very common to get seller concessions and have help from sellers, but it may not cover everything. So what's out there for people that need that extra little bit of help? You know,
rising home prices and like you said, the increase in closing costs have definitely impacted, what is like the single biggest hurdle for especially newer buyers to walk into housing, which is cash up front, right? It's very expensive, especially here in Southern California, even to rent. Cost of living is astronomical. It's hard to say like, oh, no problem, you can buy a house, just go and save 50 grand. Like I want to know that savings plan, right? Or you're going to wait 10 years to be able to buy a home. So none of those are really great options. So the industry has developed down payment assistance loan to help bridge that gap. Now look, straight up, if somebody is capable of bringing in their own financial elements to be able to do it, you're always going to end up with the best terms for that loan, right? But for somebody who doesn't have that, or the proposition of saving that kind of money is just not really like a real thing, we've got these programs that will bridge that gap. So like if you need a 3.5% down payment in order to facilitate an FHA loan, we have a program that will provide that 3.5% as a second loan to the buyer at an extremely low interest rate, and you don't even have to make any payments on it. The whole idea is that with down payment assistance programs, you don't necessarily pay that back. You let the house appreciate in value, and then the house pays it back. Right? But they're great programs. And that used to be sort of typecasted as a first-time homebuyer benefit. We now have down payment assistance programs that can serve subsequent owners as well, like second-time or third-time owners. Now you might say, well, why would a owner who's selling their house and is sitting on $50,000 or $100,000 need down payment assistance? Well, a lot of people are thinking that next year is going to be a huge opportunity for investing in certain areas of the U.S. economy, right? The stock market, crypto, a lot of talk about that today. So a lot of people would prefer to borrow this 3.5% down payment requirement at a super low interest rate that they don't even have to make payments on. And then they can go out and take that same amount of money and put it to work for them.
Love that. So they can keep that equity and use it in other ways.
For sure. I mean, it does, different strokes for different folks, right? But at the end of the day, down payment assistance really bridges the gap and helps a borrower get into home ownership sooner than if they saved up for the resources to do it on their own.
I love it. Okay, now I'm going to go a totally different direction. So if anybody has heard the term non-QM loan, What the heck does that mean? And when is that relevant?
So a non-qualified mortgage. So, a lot of what we were talking about in that other 10% fall under this category of non-qualified mortgages. So a non-qualified mortgage is just, to really ultra simplify it, it just means we're going off of the traditional income analysis that is accepted by Fannie Mae, Freddie Mac, FHA, and VA. And the lender is using alternative tools to be able to come up with a reasonable assertion on whether or not they're going to be able to make the mortgage payment, right? So, there used to be a little bit more of a negative stigmatism on non-qualified mortgages or non-QM loans. That is no longer the case. They are a real tool for home buying today, especially for the self-employed population or for people that have maybe had a recent financial calamity, a bankruptcy, things like that, but have rebounded quickly and maybe quicker than some of the more like vanilla in the box loans allow for. So I'm a big fan of non-QM loans. This is a big call out to the lenders out there. If you haven't embraced non-QM loans and have a full understanding of it, you really need to.
I love that. Okay, so let's talk about credit scores and mortgage approval. So we talked about the different loan products that are out there. How does your credit score really impact the mortgage approval?
Yeah, so I said earlier that interest rates are basically a reflection of risk. Right. And what lenders use, what the whole country uses to ascertain what score a buyer has is reflective of what their credit capacity is. So somebody with a high credit score is a good credit risk. Somebody with a low credit score, conversely, is a bad credit risk, right? So it is a direct impact to a borrower's financing. The higher the credit score, the better the rate, hands down.
Side note there. One thing that I have learned over the years is, if they go on their, their credit card or their bank where they get given their credit score, it will be different than the number that you pull.
Oh, no doubt. There's like 11 different algorithms of pulling credit scores.
I don't think people realize that.
Yeah, they do. And so I would tell you, hooking up with somebody who is the right purveyor of these types of loans is really the only way to go about this. There are some situations where a buyer comes in preloaded with, oh, my credit is this, and we pull it and we're like, oh, no, it is not that. And sometimes, believe it or not, it's the opposite. Like, oh, Dave, I think we really have some problems, and we run it. I'm like,
you're good.
No, you're great, in fact. So, but no, it can definitely be different. And I will add a note to that.
Yes.
Credit is algorithm driven, right? A lot of people think naturally, well, pay it off means better credit score. That is not the case. So stop the brakes or pump the brakes here for a second. Yes. And a lot of times people who are like trying to self-prepare for the biggest financial decision they're ever going to make in their life, they run into that wall because they'll come to me and they'll say, oh, Dave, this is great. My wife and I, we worked so hard. We paid off all our debt and we closed all our credit cards. And I go, oh no. And we run the credit report and the scores are in the tank.
Oh, that's why they need to talk with a professional like you first. That way you can help them understand all those nuances. For sure.
Nuances. I mean, we don't just help with understanding. Like we get super strategic with it. Our goal is not to just get somebody a loan. It's to get them the best
loan.
Yeah, for sure.
Absolutely. Okay, so let's talk about the role of down payments and mortgage insurance. How do those two relate?
So once upon a time in the caveman days, somebody drew a line in the sand at 20%, and they said if a customer puts more than 20% down, then it's considered a safer loan than somebody who puts less than 20% down. I'm obviously being a little facetious with that. But so if a borrower puts less than 20% down on a loan, they have to get mortgage insurance. And the mortgage insurance doesn't insure them, it insures us against losses, right? So the whole idea is that like if we have to take inventory back, if we have to like repo a house, right?
Which nobody wants,
including us, by the way. There's this big perception that lenders are sitting here like, we want to take the house back. We are not property owners. We are money lenders. That's our business. It's very disruptive for us to take inventory back. We all learned that in the crisis of 2008 and 9.
Sure did.
So the mortgage insurance helps keep lenders whole because a lot of times by the time a lender facilitates a foreclosure, they're actually upside down. They've lost money on their initial investment. So this mortgage insurance kind of kicks in and makes them whole. So that's the deal on a conventional loan. If a buyer puts more than 20% down, they have enough stake of their own in that loan where the industry has decided they do not have to have this extra amount of insurance. But if it's less, they have to. I mean, this shouldn't be like a negative stigmatism. Mortgage insurance is not a bad thing, especially for first-time or newer home buyers, right? It represents about 90% of every first-time homebuyer who's buying a home is buying a home with BMI. So it just kind of is what it is.
So it's just something that gets factored into the budget.
For sure.
Okay, so very, very simple question. How do you get pre-approved for a mortgage?
Call me. No,
1-800-CALL Dave.
So it's a simple question, but it's a complex answer. And, there is a wide array, a big spectrum out there of how lenders treat pre-approval processes. Katherine, there are websites you can go to today, answer 7 questions, and print your pre-approval letter.
That is terrifying.
It's ridiculous, right? I mean, it is terrifying. Whereas, like, you go through me, like, you're gonna kind of go through the coffee grinder a little bit, and it's for your benefit, not for my benefit. Trust me, right? But we're going to get in. We're gonna like really get into your income and look at the different elements of variability and come down to one little number. When we have a file, we have to take sometimes a very complex income situation and take it down into like one little number that you get to type into the box. If you're off by $1, the loan could fall apart at the end of the day.
You don't want that.
You definitely don't want that.
Okay, so this, to somebody who doesn't have the frame of context with this, that might sound like, oh gosh, what's that going to take, weeks? Is this a super long process?
Good question. It shouldn't be. I mean, like we work as quickly as our customers can work with us, right? We have a really sort of well ironed down 3-step process. The first 2 steps is we just need to get a quick application. Probably takes 10 or 15 minutes to do that. And then they need to provide some supporting documentations, a couple pay stubs, a couple W-2s, a bank statement, and a driver's license is generally it. And from there, the lender might take 24 to 48 hours, but no longer than that. And then be able to really break it down in a very thorough analysis of what their options are.
I love that. I love that. Okay, so can you give me any tips? So we talked about how the folks they're like, oh, we paid everything off. We closed all of our credit card accounts. And you're like, no. What about some tips of improving your chances of approval? Any little tidbits you can provide?
Yeah. If you are interested in buying a home in the next 12 months, now is not necessarily the right time to go buy the new car, to go open the new credit card, to buy that timeshare you've always wanted in Cancun, right? Those things, although they may not impact you, it's highly probable that they could. So I would just recommend that, people ask me all the time, Dave, how early is too early? There is no such number, right? Like from a lender's perspective, I appreciate the most runway possible that I have. If a customer tells me, Dave, look, we've got 2 years left on our lease or 18 months left on our lease, we really want to structure ourselves so at the end of that lease, we never have to sign another lease for the rest of our life. Yeah. That's the greatest conversation ever to have with someone, Katherine. And knowing that I have 18 months to optimize, I can really be a guide during that process of like, okay, you can buy the car, but like, let's set some ceilings on what kind of financing you're going to obtain on that, right? Because a $300 payment will impact them a lot different than a $700 car payment will.
Absolutely. Yeah. Absolutely. Okay, so I'm hearing all of these wonderful things that you're saying. We talk about the importance of hiring the right team. How does a buyer know how to choose the right lender?
Yeah, that's a big question because there's a lot of us out there, and I think it's pretty similar to how you would choose anything of importance in your life, right? Ask the right questions. Don't be told things. Be educated. I mean, look, what I love is we're really driven by our core values, right? So education, empowerment, speed, humility, and communication. That's like really who we are from like a biblical standpoint. And I love when a customer asks me, like, Dave, what do you stand for? What's your unique value proposition? I love that question because it gives me a wonderful platform to let them know that we actually have one.
Say those again, because you just went through them really quick. So what are
it's like breathing to me.
Yes, which is fabulous. But what are those core values that you have?
So education and empowerment, right? We just believe in putting the borrower in the driver's seat. I really don't think that people should be told what to do by people like you and people like me. No. We should equip them with the information, the data, the understanding, the know-how, the empowerment, so that they tell us what to do at the end of the day. Helps us all sleep better, in fact.
Yes.
So education, empowerment, speed, just brutally speed. You have to be in this market to be relevant and to be impactful. You have to be able to do it quicker and faster than the guy to the left and the right. And so we have a lot of resources that we dedicate towards achieving that. Humility. Catherine, I don't care if it's a first-time home buyer, a 10th buyer, if they're buying their, if they have a 600 credit score and an 800 credit score, it just literally makes no difference to us. We are here to serve. We believe that everybody, whether you qualify or not, deserves our time, our attention, and a full analysis, because we don't know what we don't know. And for somebody that doesn't qualify, how are they going to have a roadmap to get to where they do if people don't invest in them?
I love that.
Right. So humility, that's our driver. And communication, we're expert communicators. Everything we do, I mean, the same way we interact with you, with our agent partners, with customers, like everybody has to stay in the know. In fact, even on the listing side, right, we're huge communicators with them as well, because we know that they are the instrument that's going to be conveying a sense of security over to the seller. Right? We just want people to stay on the level. Buying and selling real estate can be a very emotional experience for a lot of people.
Yes.
And good communication is a mitigator of those spikes of emotions and helps everybody stay on the level.
Very true.
Yeah. So ask
Yes.
your lender, what are your core values, and make sure it's a match with yours. And if it's not, change lenders. It's as simple as that.
Yeah. I love that. Okay, so I am just going to encourage anybody watching this that if this resonates with them, that they give you a call.
Oh, thank you.
Yeah, absolutely. Whether or not you're buying your first home or your 10th home, like we talked before, the industry is always in flux. It's always changing. And it's valuable to have a conversation with a realtor and with a lender that you trust to get that foundation. And we can help with that.
No doubt.
So what do they need to do? They just need to shoot us a message, right?
Yeah, absolutely. It's really an awesome experience getting to somebody who is even just starting that thought process. It's one of our favorite things to do.
Me too. Well, thank you, Dave, thank you for letting me just totally quiz you today.
Ooh, that was like the 1, 2, 3 shot. I like it.
Boom and done.
Thanks, Catherine.
Yeah, absolutely.